So I'm gonna be showing you a nice, simple liquidity grab strategy that you can use in any of your challenges or phases that you're currently doing, or if you're growing any personal small account. This is the exact same concept and strategy that I had used to up my 4,000 to 40K, that I've used to pass prop firms, and also that I'm still currently using to trade at this given moment. So what we're going to be talking about today is, like I said, liquidity grabs. Let me show you an example of what liquidity grab can look like in a perfect world as far as how I'm going to break it down. My concept and strategy is part of whack off, which I will pop it up and it may look very complicated to what it is that I'm actually showing you. But basically what you're seeing is the accumulation and the distribution schematical play of whack off. A lot of traders really don't understand this part, but they understand the supply and demand, or they understand the smart money concept of trading. And a lot of that goes back into this concept or this schematical play, which is whack off, which has been developed early centuries. So I discovered and came with a cool, simplified way to find entries to take away all of that you're seeing and make it to the point where instead of me looking at this full whack off schematical play, I'm just looking for 2 to 3 moves to determine my entry. So when we're dealing with any type of strategy, or really not strategy, but any type of structure in the market, whether if it's S&P, oil, GBP, USD, or anything like that, my thought process is I'm looking for a 3-move bounce before buying this move. We all are familiar with support and resistance, right? We understand that the support level, the resistance level, if we bounce off the support level, we can buy. If we bounce off the resistance level, we can sell it. However, that is not all the way accurate. Instead, what happens is banks, algorithms, institutionals, smart money, they see these bounces as money that sellers, buyers, retail traders had left behind, or still currently keeping here for a buying position or selling position. But the smart money concepts understands that there's money here, and before we really take off, I want to take this $5 billion and then we can grab all of that liquidity known as money left in the pool. We can grab all of that money and then we can go ahead and take off. So the reason why I always like to look for 3 bounces is because if we go right back to the schematical play, I'm gonna show you guys right here, you will see that there's different phases, right? You got phase 1, phase 2, phase 3, phase 4, phase 5, A, B, C, D, E. And I know that if I'm just waiting on that buying climax, selling climax, secondary test in phase B, I know usually within that area, it already completed phase 1 and phase 2, and now we're in phase 3. And usually within phase 3, you get something called a spring. And a spring is basically that liquidity grab that everyone talks about. So when I spot that anywhere in the market, and it is best to spot it when the market is trending, because if the market is already an established uptrend, this is what we like to call reaccumulation. So what reaccumulation happens, we're getting these 3 bounces in that same area, or these 2 same bounces in that same area known as support and resistance. I'm going to sit and wait on that spike, and this can be seen as a stop punt, a sell stop, a buy stop. I see this as liquidity grab, liquidity sweep, and once market decides to sweep it, rather if it's a wick out or rather if it's a closeout, I'm going to wait on market to break right back up and then create the next segment and whack off, which once again I pop it up right here, and this right here is what we like to call the test. If we switch this scenario around and we say, all right, let's look at this as far as a uptrend or a downtrend, notice the market is going down, this is what we call redistribution. However, instead of it being called a spring, they call it something else. They call it like an upthrust in demand, or upthrust in distribution, and so forth, right? And usually you will get that final spike and then market will drop. Sometimes you still get that test. This is actually known as last point of supply, and then it will drop. This is usually where the sellers are entering. This is usually where the buyers are entering. And that right there is basically the simple concept I teach my students that we look for in the market. And also a lot more other little cool little features that we look for to really spice things up and give us that full confluence in the trade that we should be entering in this trade. So let's take this overall example and look at this in a live market. So I pulled up an example with S&P 500, and I just want to show you guys how effective this is. So remember when I said earlier that if you can catch this in the trend, it's very best to make good money, because now you're in what we call reaccumulation or redistribution, but in uptrend reaccumulation. So remember what I said earlier, that I usually like to look for 3 bounces, mainly 2, 3, mainly 3, but 2, 3 bounces is fine. And I know from this area to here, we're looking at one phase, we're looking at another phase here, and possibly another phase here, another phase here. So what I like to do is always look for the area where market is hitting multiple times. And I usually like to put a line and call it unfilled. When I say unfilled, I know that this line has not been filled yet, which tells me that market still has a high percent coming into this area before spiking. So for me, when I'm dealing with reactions like this, I'm waiting on that final move to break out, right? While everybody else is like, oh, this is a breakout. No, we're like, this is a grab. This is liquidity. This is money right here, money right here. So I'm looking for that spike. Now, it's best to catch this on a higher scale, like a 1 hour, daily, in a 4 hour time frame, because you can get the bigger picture. And when you get the bigger picture, you can catch more pips and more points. So seeing that we are already on a 1 hour time frame, I'm already knowing that this right here is probably a trade that I 100% should be getting into. So that being said, what I then do is right after we get this spring, I want to confirm that spring, meaning that I want to confirm this is that final liquidity grab. And the way that we really confirm that is by looking left, right? We look left and we see that as we're looking left, we notice that this is that most recent high. So if we can break out of that high and then pull back and give us that engulfing candle or give us some type of reaction, that right there is the signal that I look for to get in for the buy. Because then now I can tell myself and I feel confident that, well, we broke the previous high for one. So that could be the possible reversal that we're looking for. And then for two, I also know that seeing possibly we can get that lower high to form, this or the higher low to form, this is a signal for us to really enter. And the sky, you could take this to however far you want to. How I like to do it is I look for the next unfulfilled area, like right here, right? We have another area that needs to be fulfilled, and this was unfulfilled. It was unfulfilled at the time, and we got fulfilled. So I went ahead and marked it fulfilled. But that right there is the simple concept that we look for, and this can be seen in any time frame, especially if you look on smaller scales right now on a 1 hour. But if we look at this on a smaller scale, if we were to, let's say, we maybe replay this back, maybe go on a 2 minute, hopefully allow us to, you see the same exact setup here, right? Notice how we had 2 hits, finally broke through. Where's the most recent high at? This one might have been seen differently. You might have seen it here. We broke through that high. We retested. Maybe you might have had entered in this candle. I always like to put my stop loss below these lows here. The market went up. You could have easily took that as a scalp trade too. So what I'm getting at the end of the day is, no matter what time frame you are on, you will always see the setup, because this is a schematical fractal play. It happens in every time frame and every scale because it's part of structure, part of how structure is made. So that being said, if you guys want to get in tune with our VIP community, make sure you check the links down below. Join our Discord, join our signals room. We have our bot that calls out trades, and you can automatically pass challenges with it. You can also grow your accounts. You can also get your payouts and so forth. And other than that, guys, I appreciate the love. Make sure you comment and subscribe if you want to see more. Your boy Solo, I'm out. Peace.